All right, guys, so the number of stocks that are hitting 52-week lows just seems to grow more and more, and it's not crazy penny stocks or anything else. These are huge blue chip type stocks and some just incredible stocks, but I have to caution you guys as some of the stocks are complete junk and they're going a lot lower than where they're at right now. So we'll kind of go through the 7 biggest ones and I tell you if there's a massive opportunity there or if there's a lot of pain ahead for those stocks. And if you want to be financially independent on the track to retire, and you want more content about finance that's not exactly stocks, but kind of everything else that goes into finance, make sure you check out the new channel. It'll be a pinned comment down there. Just kind of stop by, and if you like it, hey, I'd love to see you guys subscribed over there too as well. Now, back on track in regards to this subject, to be upfront, I don't care about 52-week lows or 52-week highs or anything else like that. And it's simply because a stock can be at a 52-week low and still be significantly overvalued. And same thing, a stock can be at a 52-week high. I don't care about the 52-week high and whether or not it's 50% off its 52-week high or anything else like that. The 52-week high does not represent where the stock should be. Generally speaking, and especially if we're given 2021, the 52-week high meant that right there was the blow it off top, most ridiculously overvalued thing ever. So it's absolutely useless for me to even think about a stock being on a discount from that point. And more importantly, looking at that stock and going, man, it can get back up to that place. Maybe it can, and maybe in some instances, a 52-week high represents a price that the stock could realistically get back to. But in a lot of cases, that's not the case at all, and that's why I just don't care about it. I don't pay attention to it. Now, I'm not trying to create controversy here. I know there's a lot of YouTubers out there that are just screaming that some of these stocks are just crazy once-in-a-lifetime type deals, despite the fact that they're just now back to fair value. So I don't know how you can be a screaming, once-in-a-lifetime kind of deal if you're back to just fair value, considering during the financial crisis, a lot of these stocks were 20, 30, 40, 50% below where fair value was, as opposed to right now, we're just back up to fair value. But, I'm not here to start controversy. I'm not going to poke names. I'm not going to say anything else like that. I'm just going to give you guys my opinion on these stocks. And my opinion is based upon valuation for the stock itself and the opportunity that lies ahead for the stock. And speaking of controversy, the last two are going to be controversial, of course. So, of course, comment down below. Let me know what you guys think about those stocks and whether or not you think they're controversial or not, whether or not you agree with my take or not, because I understand a lot of you guys aren't going to agree, and that's cool. I totally get it, man. Let's have a discussion down in the comments about it. So the first stock up is General Mills, and you guys want to talk about crazy? Let's get a little crazy here. This stock has been on my watch list since 2021, and I still, despite its fall, have not bought a single share yet because it's so close to being in range in regards to fair value to where I'm going to pull the trigger and buy shares, but it just isn't there yet. And that's right, guys. Sometimes you got to wait 2 years plus in order to get to a stock because they're that overvalued, and that's exactly what happened to General Mills during that time frame. It just got overvalued, kind of continued to run as a lot of our other growth stocks continue to fall, and I just haven't been able to add shares yet, but boy, it is so close, and I cannot wait to add to this stock. This was absolutely a flight to safety style stock, and it's just one that I wanted to buy, but valuation told me not to buy it. And so instead I bought, obviously your Palantirs and your Metas and your Teslas and some stocks like that were absolutely below value. And I had to wait. And the patience is key in this game. Sometimes you have to be patient even when you don't want to. And that's right. That means that this stock continued to climb and continue to climb and continue to climb. And now it's finally had a decline down to 30. PE's right around 15, 14, 15 or so. I'd like to see it get down to 12 before I actually jump onto this stock. So we'll see if we get there or not. But for right now, I've been holding off on this one, but it's one that I absolutely am looking to add. So again, we're close enough to fair value if you bought it right now, especially if you just were going to DCA into the stock over the next, 3 months, 6 months, whatever the case is. Probably not a bad place to start, but I'm going to be a little bit more patient and wait and see if it hits my price target. And remember, if you want to see all my buys in real time, just check out the pinned comment down there to be a member of our group there. I may have left something special for you guys over there. So just check out the pinned comment and see if it's right for you. So stock number 2 is ChargePoint. And this one right here, guys, is one that I didn't understand to play. I got caught up in that EV hype at the very, very beginning of all that. Obviously back in 2021 and all that sort of stuff were just, I don't know, everything that had the word EV or anything to do with EV was going to the moon, and it was a $10 trillion opportunity and all that other stuff like that. And for me, I didn't like ChargePoint from the start, basically because of the margins. The margins were just too slim to begin with. And I don't see with slim margins like that, and more importantly, Tesla absolutely eating their lunch with superchargers and everything else, I just didn't see the play there. I understand we need more charging infrastructure. I understand that there's going to be a lot of growth in that area. I agree with that there. But man, when you're working with such slim margins, and they've really haven't done a whole lot to, make that better, to increase those margins. So whenever you have a management team that's, 2, 3 years into this, and we still aren't seeing margins really improve all that much, And more importantly, you got somebody like Tesla who's just eating their lunch all the way around and everybody's kind of converting over to the Tesla model per se. That right there to me is kind of a red flag that do I really want to own this stock or not? Are they a buyout candidate for anybody? I really don't know. So I haven't deep dove this stock, so I can't speak anywhere in regards to valuation and everything else like that. But I can tell you right now, this one right here was one I wasn't interested in during the hype, and I have really no interest in this stock now. But stock number 3, I have a lot of interest in, and that would be Coca-Cola. And that's right, guys, the Warren Buffett favorite. I was finally able to buy this stock. I've wanted to own it for a long time. Probably going back a decade plus, and I've just gotten distracted in between and haven't paid as good of attention as I should have over this stock. But man, has it ever cratered over the past few months and finally fell down to what I feel was just fair value. And again, you don't have to pay a stupidly cheap price in order for a great stock like Coke to pay off long term. Just look at what Warren Buffett and the valuation he paid for Coca-Cola back in the day on his shares, and then tell me if he's very, very happy today with that buy, despite the fact he probably overpaid a little bit at the time for those shares. And I think the answer is a resounding yes. And that Coke's one of those steady products that they do well during recessions. They do well, anytime, boom times, bad times, doesn't matter. Coke is just one of those staples. It got overheated just like a lot of the big dividend plays, the old man style stocks did last year as you had kind of a flight to safety. And I knew not to buy last year, just like I knew not to buy a lot of other stocks that I wanted to buy because that's where the money went instead of to our favorite growth plays. And so now it's time to where it's starting time, at least in my opinion, to start putting money into Coke. And so I've started that and I'm going to continue to buy it as it continues to trail down. But stock number 4, I honestly want no part of, and that stock is GM. I don't know, guys. It's legacy auto, and putting the Tesla versus legacy auto, kind of argument aside here, just take a look at the financials. Take a look at the balance sheet. Take a look at the income statement. Take a look at everything that's involved there, and you tell me whether or not this is a great stock or not. I don't care what Kramer says. I don't care what anybody else out there says. I just need to look at those financials and know it's just ugly for any type of business, much less a high capital intensive business like GM is in. And then of course you add in all the other labor disputes and everything else going on. Obviously higher interest rates, meaning people are going to buy less cars because now you're paying 6, 7, 8% for auto loan as opposed to 2, 3% before. It just does not look well for auto in the short term. And for me, the long term, as they kind of have to do this deal, with the labor unions, and they're having a lot of debt that's going to start coming due, and it's going to have to come due at a lot higher interest rate. To me, this is just one that I'm staying far, far away from. All right, and on to the controversial part of the list now. These next 3 are highly controversial, but hey, that's okay. They're hitting 52-week lows, whether we like it or not, and so we got to talk about them. So first up out of the 3 would be Walgreens. Now, unlike a lot of other stocks, it had a bad year last year. It's having a bad year this year, and just nothing can go right. Nothing is happening that, you really feel, hey, the plans that they laid out didn't exactly go as planned. And then now the management team is out and they're waiting on a new management team to come in. It's just, honestly, it's kind of a mess all the way around. But thankfully, the business underneath is a very good business. It's trading ridiculously cheap right now, but it has a lot of question marks. What's the new management team going to be? What are they going to do? Is the dividend at risk or not? Which, of course, will definitely change the investor base of this stock if they decide to cut the dividend. And there's just a lot of other questions like that you have to understand. And you have to understand the risk with those questions too, that, hey, it could send the stock a lot lower if some of those things go poorly. And so far, a lot of things have gone poorly this year. So you can't say, oh, that's not going to happen. And basically, shoo that away as being outside the realm of possibility. Absolutely possible. So for Walgreens, this is one that I've been cautiously buying. However, I can't say that there's not risk there. And I can't say that it's not going to turn around this year. It's just not. There's nothing working in its favor right now, barring some sort of thing that kind of comes out of nowhere, a huge coup in regards to the new CEO coming in, or something else like that, really turning the ship around in the short term. It's going to struggle for a little while until they get in that new management team, until we see that new vision, until they start to execute on that vision more importantly, and we start to see some of the numbers get better. So until then, this is probably going to be a tough road ahead here for Walgreens. So you got to understand that if you're going to own this stock. So stock number 6 is PayPal, and you guys knew it's going to be on the list. It's like it makes a new 52-week low every week for the past year plus now. It kind of feels that way in regards to this stock, and so I've got to include it on here. And I know it's controversial. If you're like me, it's just, man, just looking at all the numbers, looking at the free cash flow, looking at the valuation, there's just, I don't know what Wall Street's thinking. I don't know why they're not on board with this. I am super, super curious this earnings call to see exactly what vision the new CEO lays out, exactly what they're going to put out there in regards to the path forward. And I'm hoping he really shakes some things up and we kind of see that next leg up in regards to PayPal. But right now, it's still making 52-week lows. It's still in the doghouse, and Wall Street wants absolutely no part of it, regardless of what they're doing underneath. And so you've got to understand that risk that if this CEO comes in and he bombs, man, we think it's painful right now. It's going to be a lot more painful if he comes in and bombs. Now, if he comes in and goes the other way, there's a chance that you could go on not necessarily a meta style run, but a very quick move up, a quick double up from here is not out of the realm of possibility over the course of 6 months or a year if that new CEO comes in, gets the investor base excited, and they start to, more importantly, execute towards whatever vision he lays out. So that right there is kind of the play with PayPal. And again, I know it's controversial, but hey, comment down below. Let me know which side of the deal you're on. Are you, pro PayPal or team PayPal, or are you against PayPal on that side? And the final stock we're going to talk about today is Verizon. And I've honestly gotten a lot of questions about this in my group specifically and a few other places as well, because just the valuation is really, really cheap. But I personally have no desire to own Verizon. They're very debt laden, very much like Legacy Auto. There's just, they got a lot of long-term debt that's coming due that's going to have to get refinanced at these much higher rates. I don't know how much more growth is left for Verizon given their size. So there's not a lot of growth left in the stock. And there's just a lot of things working against it. I don't like the financials. I don't see a way for them to get away from that. Matter of fact, on some of their business lines specifically, they're kind of legacy dying businesses. So for me, yeah, I think it's at a 52-week low for a reason, and I think we're going to continue to see that stock trade lower. Now, maybe there's, something else going on there. I have not deep dove it yet. I got to be honest and upfront there about that. But in regards to taking a look at the balance sheet, at the income statement, at everything else that's going on with that stock and its current business lines, they need a big shape up in a hurry in order to really turn this stock around. So for me, I don't see it right now with Verizon, so I'm staying far, far away. And remember, if you want to see all my buy and sell alerts in real time, you want to see my watch list complete with price targets, you want to be able to slide into my DMs, talk to me directly, access to me anytime you want. You want to be a part of the best 6, 7, and 8-figure Discord out there. Take 5 courses for free. We got a stock analyzer tool you can use for free that other people charge, I don't know, $15, $20, $30 to just use their stock analyzer tool. I'll let you guys use it for free as part of your membership, and a ton more. Make sure you check out the pinned comment down there and see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. Well, thanks for watching, and we'll see you in the next one.